All right, welcome everyone. We're here to do a deep dive into a fresh stack of sources all about the crypto market.
Yep, focusing on what's been happening right around June 12th, 2025.
Exactly. We've got market moves, some specific project updates, and even whispers about things like corporate adoption and maybe altcoin season.
Our job is basically to sift through this pile for you, pull out the really key stuff, maybe find a few surprises.
Will be your guides. So let's just jump right in. What's the immediate picture? What are these sources saying about the market today?
Well, the first thing that really stands out across the board is a bit of a downturn today, June 12th specifically.
Okay. Numbers.
Yeah, the sources mentioned the total market cap fell about 1.68%, landing around $3.39 trillion. And trading volume also took a hit, down to roughly 5.27% to about $133.81 billion.
Oof. Okay, so a pullback. And did the sources give a reason for this particular dip?
One of them did, yeah. It directly linked this crypto slide to downturns in the traditional markets.
Ah, the stock market connection.
Exactly. Pointing fingers at the DJT, the S&P 500, and the NASDAQ all being down.
That's always interesting seeing that correlation play out. How much crypto is sort of tethered to Wall Street sentiment on any given day.
It really is. And it keeps shifting. Sometimes crypto does its own thing entirely. Other times, like today, apparently, you see this kind of reaction. It shows how, well, interconnected things might be getting.
So red across the board today may be taking cues from traditional finance.
Okay.
But let's zoom out from just today's price action and look at Bitcoin specifically. These sources have a few different angles.
Right.
One piece mentions Glassnode, the on-chain analytics firm. It says their analysis uncovered, and I'm quoting here, key signals for an explosive surge in Bitcoin's price.
The predictive signals.
Yeah. But here's the thing. The source mentions this finding, this potential surge, but it doesn't actually spell out what those signals are, which, leaves me wanting more.
That's pretty common, actually. They'll report the headline finding. But yeah, the source points to the potential without detailing the exact why from Glassnode's latest data poll.
So what's a general idea behind looking for signals like that, even if we don't know the specifics here?
Well, on-chain analysis, like what Glassnode does, it looks under the hood, right? It tracks actual activity on the Bitcoin blockchain. Things like how many coins are moving? Are they going into wallets that tend to hold long-term? Are exchanges seeing inflows or outflows? What are miners up to?
Okay, the network's vital signs.
Exactly. The idea is to spot patterns in that fundamental activity, shifts in how people are actually using Bitcoin that might happen before a big price move. It's trying to get ahead of the curve using data, not just charts.
Data-driven predictions. Okay, that makes sense. Now, another angle on Bitcoin comes from Matt Hugin at Bitwise. This was from a Juneteenth interview mentioned in one source.
Ah, yes, the Bitwise CIO. What's his take?
He apparently believes corporate interest in Bitcoin, companies holding it, is just beginning.
Just beginning.
Yeah.
Wow.
Yeah. And he argues it's growing because traditional cash management strategies lose effectiveness. That's his reasoning.
That's a really significant perspective coming from him. It taps into that whole institutional adoption narrative.
Explain that a bit more. Why is that so important?
Well, think about it. Companies hold cash reserves, right, for operations investments. Traditionally, they'd park that cash in bank accounts or maybe short-term bonds, things considered very safe but often low yield.
Right. Not making much money on it.
Especially now, potentially. If inflation is a concern or if yields are just super low, those old strategies don't look as good. Yeah. So Hogan's point, as reported here, is that companies are starting to see Bitcoin as a potential alternative for their treasury, a way to maybe preserve or grow that capital.
And if corporations start moving even a small part of their treasuries into Bitcoin?
That can mean a huge influx of new money into the market. It's a big deal because it signals deeper integration into the traditional financial world. It's not just individuals or specialized funds anymore.
Okay, that paints a potentially very bullish long-term picture for Bitcoin, completely separate from today's dip or even those Glassnode signals.
Definitely a different kind of driver.
All right, let's shift gears then from Bitcoin to the wider world of altcoins. These sources touch on that too. One asks that perennial question.
Let me guess. Altcoin season.
You got it. Is altcoin season 2025 around the corner?
Always the question. So how does this source tackle it?
It talks about something called the altcoin season index. Describes it as a way to track the percentage of top altcoins that are actually outperforming Bitcoin over the last 90 days.
Okay, so a specific metric trying to quantify that feeling makes sense. rather than just vibes.
Right. It's trying to measure if money and momentum are really rotating from Bitcoin into alts.
And what's the verdict from this index, according to the source?
Pretty positive for alts, actually. The conclusion cited is, key indicators signal a potential breakout.
Interesting. So the index is flashing green, potentially.
Yeah. What usually needs to happen for a real altcoin season to kick off, historically speaking? Is it just Bitcoin going sideways?
That's often a big part of it. Historically, you often see Bitcoin have a strong run-up first, then maybe it consolidates, moves sideways for a bit.
Okay.
And during that consolidation, traders and investors start looking for the next big move, often turning to altcoins, which, are typically smaller and perceived to have more room for explosive percentage gains.
Chasing higher returns down the market cap list?
Pretty much. So an index like the one mentioned, it's just trying to put a number on whether that performance rotation seems to be happening based on that 90-day window.
Gotcha. So the index hints at potential, but let's look at some specific projects mentioned. First up, Hello Labs. What's the news there?
The source highlights some major token economy upgrades for their Hello ecosystem.
Okay. Upgrades like what?
It lists a few things. A deflationary structure, a multi-chain bridge, moves to strengthen the Hello token utility, and something specific called a burn and earn model for Hello Club.
Right. Can you unpack those a bit? What does deflationary structure usually mean in crypto?
Generally, it means they're putting mechanisms in place to reduce the total supply of the Hello token over time. Fewer tokens potentially means increased scarcity, which could support the price if demand holds up or grows.
Makes sense. And strengthening utility.
That's about making the token more useful within their ecosystem, giving people more reasons to hold it and use it maybe for accessing features, paying for services, governance, that kind of thing. More utility can drive demand.
Okay. The bridge is just for using it on different blockchains.
Yeah. Multi-chain bridge usually implies making the token accessible and usable across multiple blockchain networks, increasing its reach.
And burn and earn sounds catchy.
It does. It
Yeah.
likely means there's a system where using the token for certain actions, maybe related to this Hello Club, causes some tokens to be permanently removed from circulation. That's the burn.
Taking them out of the supply forever.
Right. And the earn part probably means users get rewarded somehow, maybe with more tokens or other benefits, for participating in activities that trigger the burn. It creates this loop trying to reduce supply while also incentivizing people to use the platform.
So a lot of typical mechanisms aimed at making the token more valuable and integrated.
Exactly. These are common tools projects use to build out their tokenomics.
Okay, interesting. Now, another source threw out a comparison, BlockDAG versus some established names, Stellar, XLM, and Avalanche.
If EAX.
The newcomer versus the incumbents comparison. Always popular.
Yeah, and this source positions BlockDAG as a, quote, top pick relative to how XLM and AVAX have been moving lately. But what really caught my eye were the numbers they cited for BlockDAG.
Oh, like what?
Like $298 million raised, which sounds like a lot.
Wow, yeah, that's significant fundraising for a project.
And a price point cited as 0.0 euro 1 teen, and get this, a 2,678% ROI.
Okay, wait. $298 million raised, a sub-penny price, and over 2,600% ROI.
That's what the source reports. Right, so this comparison is highlighting BlockDAG's very successful early fundraising and what appears to be massive gains for very early participants based on that 0.001 cent price point.
Exactly.
And they're contrasting these really eye-popping early-stage metrics against the more mature price movements of established coins like XLM and AVX.
It's quite a contrast.
It is. It's important to understand what's being compared. You've got early-stage, pre-market, or very early market metrics fundraising, initial ROI from potentially very low entry points, versus the performance of established liquid assets trading on major exchanges. They're different beasts.
So the source is using those big early numbers to suggest BlockDAG has high potential compared to the current action in XLM and AVX.
Precisely. It's an approach aimed at highlighting potential upside, appealing to those looking for that next explosive growth story, though obviously early-stage projects carry different risk profiles.
Those numbers are definitely designed to grab your attention.
No doubt about that.
Okay, so let's try and pull these threads together. It's kind of a mixed bag from these sources today.
It really is.
You've got the immediate market showing weakness, maybe linked to stocks, a bit gloomy short term.
Yep, that immediate snapshot.
But then, digging deeper, you see these other elements. Potential bullish signals for Bitcoin from on-chain data, even if the details are fuzzy in the source.
Right, that Glassnode mention.
Plus, that commentary about serious corporate interest just starting to build, a potentially huge long-term factor.
The Hugin perspective, yeah.
And then on the altcoin side, you have this index suggesting maybe the conditions are getting right for a broader altcoin move.
The altcoin season possibility.
And specific examples like Hello Labs working on their tokens fundamentals and BlockDAG being showcased with these massive early funding and ROI figures.
Exactly. So you see these different layers, right? Short-term price action, underlying data trends, institutional shifts, and individual project developments all happening at once.
It really paints a picture of just how much is going on and how you can get different signals depending on where you look.
That's the key takeaway, I think. This collection of sources really demonstrates why you need to look at the market from multiple angles. You can't just watch the daily price. You need to consider the tech, the adoption trends, the data.
Couldn't agree more. So just to recap for everyone listening, we touched on today's market dip, possibly tied to traditional markets. We looked at potential bright spots for Bitcoin, those Glassnode signals and the growing corporate interest. We considered if an altcoin season might be brewing based on that index. And we dove into specific news from Hello Labs and BlockDAG.
A whirlwind tour through the June 12th crypto landscape based on these sources.
Absolutely. So here's something to leave you with, a final thought to chew on based on all this. When you see this kind of mix of market dip mirroring stocks, alongside hints of explosive surges from data, plus signs of big corporate money potentially coming in, and all this activity in specific altcoin projects, what does that snapshot tell you personally about where the crypto market is right now? How mature is it? What forces are really pushing and pulling it? Which piece of this puzzle feels the most significant to you or makes you want to learn more?